Hi, I'm Jamie with The Saving Secret, where I help you become more intentional with your money. In today's video, I'm going to be talking about my journey of paying off my home in less than 4 years. I'm going to talk about what are the steps that I took to prepare myself to pay off my home early. I'm going to talk through why I chose the home over other investment activities, and I'm going to share some of the tools that I use to help measure my progress all along the way. If you're new to my channel, I share videos about financial independence. I am working on financial independence and share the insights that I've learned all along the way. I post new videos every Thursday. Be sure to hit that subscribe button so you won't miss any of the latest content. Be sure to stay through to the end of this video, because not only am I going to share my secrets and insights about paying off my mortgage early, but I'm also going to share insights about what is a tool that I use that helps me measure and track my financial independence journey all the way through. So you're not going to want to miss that. If you have any questions about any of the content that I post, or any questions that you have about financial independence, please be sure to write them in the comment section below. I love to read them and I will respond. One thing that you can do for me that I would greatly appreciate it is be sure to smash that like button. It really helps me out. It helps the channel to continue to grow, where I can give you quality content that will help you on your journey. So without further ado, let's jump into it. Paying off your home is a huge deal. It's a large goal, and it's not a goal that can be taken lightly. There's many people who want to have this goal accomplished but don't really know where to start. Well, before you start on paying off your home and just throwing money at the mortgage, you really need to make sure that you have a solid foundation financially. And really it starts with making sure that you are debt free, that you don't have any student loans, any credit cards, any of these other debts that are going to hold you back. The reason why having debt eliminated is so important is because it allows you to have more money to spend towards other things. You have a higher savings rate. A higher savings rate is the #1 indicator to reach financial independence. I want to make sure that I have a high savings rate. And so by taking care of debt, you have a higher savings rate. The next thing you're going to want to make sure that you have is an emergency fund. An emergency fund is money that you have in a boring savings account to make sure that you don't need to worry about when life happens. When unexpected expenses come up, you can cover it. You don't need to throw it on a credit card. Yes, you can put it on a credit card to catch those reward points, but you have enough money in your savings account to pay off the balance full every month, no matter if something happens. Retirement accounts are the third place to look and where you want to start putting your money. It's a great place to get started in investing your money because there's lots of tax advantages. They're a great way and very simple to set up, especially if you have access through them through your employer, whether that be a 401k, whether that be a Roth 401k. There's lots of great options, and they're very simple to set up, and you'd feel comfortable because you don't really need to know a lot about investing, but you can get started that way. Now, getting started with retirement accounts, it can be confusing. And one of the things that I'm currently working on is, instead of maxing out all of your retirement accounts, what I'm doing is I'm taking advantage of my company match. So that's the first place I think is a great place to get started. The second place is a health savings account, and this is my personal favorite retirement account. I recently did a video on my personal experience with having huge medical expenses and why I feel like a health savings account is the most important retirement account. Not a lot of people have it, so if you're interested, you're welcome to check that video out. But you want to get started with retirement accounts. Once you've determined that you want to pay off your home, how do you get started? Well, you need to get a couple key pieces of information from your lender. Now, what you might find out about your lender is when you first paid for your home, or you first bought your home, you worked through an original lender and maybe they sold your mortgage to somebody else, and so now it's being tracked through somebody else. But go work with your current, whoever owns your loan, and whether that's online or give them a call. But for me, I have it set up online, so I'm able to go online and check my balance. So once you understand what your balance is, you can understand what your monthly payment is, and you understand your rate. You have all the pieces of information at your disposal where you can make a decision of how you're going to pay off your home. So there's a wonderful tool that I've used. It's at calculator.net. So let's take a look at this free tool. I have the link in the description. You're welcome to check it out. So once you click on that link, you'll be brought to calculator.net, or you're welcome to just click on calculator.net. And this is kind of what people are used to seeing. Right here, you have your original loan, your loan term, and your interest rate, and it'll squirt out what your monthly payment is. And so that's what a lot of people focus on when you first get a mortgage. But if you're really trying to pay off your mortgage, you want to see how much impact will extra payments have. And this is what this tool does a great job of. And if you scroll down, this is the remaining loan. But if you don't know the remaining loan and you have your unpaid principal balance, your monthly payment, and your interest rate, this can show you how you can pay off your mortgage. So this is what I'm going to show you, is what I've done to help pay off my home in less than 4 years. So if we punch in, when we first bought our home, we had a $160,000 mortgage. We had a monthly payment of $1163.56, and our interest rate at the time, and still is, 3.75. Obviously now you can get even lower interest rates, but that was the interest rate that we had when we bought our home. When we bought our home, we knew that we wanted to pay additional towards our house. So we wanted to get to a number that was nice and easy. So if you put in $836.44, that equals $2,000. So we told ourselves we can get $2,000. But after a while of doing that for a few months, we were able to focus even more in there and be more intentional. Like I said, without contributing more to your retirement account, you've just got started, we actually bumped that up to $3,000 a month. And then the second piece that we wanted to do is we put in an extra payment per year. So if you get some kind of bonus, you can put your bonus towards, portion of your bonus towards paying off your home. So getting started, you click this calculator button. So original balance was going to take 15 years, but with these extra payments every month and once per year, you're able to get it down to 14 years. So be sure to check out this calendar. It's a really powerful tool. You can show you what your original balance was supposed to do, and this is where your new balance is. How much that you're going to total pay is almost $173,000. Just a total interest of about $13,000. If you weren't going to do anything extra, it's over $49,000. So you're going to save so much on interest. It's really a powerful tool. But again, I look at it as you're going to be done with paying off your home in 4 years. This extra $1163, you will never have to pay again once this 4 years or whatever you type in there. If you click this amortization table, it's a quick view of what you would have done, where you would have been if you didn't pay off extra, and where you are today. So again, right here at the end of 4 years, you will have paid off your home mortgage. You wouldn't have owed anything left. If you wouldn't have done anything, you still would have owed $125,000. So again, being intentional, it's a great tool. I would recommend you looking into it. And I think this is a great tool that anybody can use, and check it out. So this is a tool kind of for the nerd in you, trying to look at it, but if you really want to inspire your family and get your whole family above it, what I would encourage you to do is check out another tool that I've built, and this is a little bit more homemade and kind of exciting. So let's check out that tool that I've done. So if you take a look at this tool that I've built, it's a homemade graph that helps us track our progress to make sure that we are on track of paying off our home. So on here we have 160 dots that represent $1,000 of principal. So every time we knock out $1,000 worth of principal, we write the month that we're on of which we paid it off. So if you look at this, we've been paying on our home for 27 months. So we've been working on paying our home off for 27 months. We've almost paid $100,000 of principal on our home. We still have a little bit more than $60,000 to go, but we are excited and it keeps us motivated. It's something that we can keep the kids involved with. So every month we're motivated to write how much we've paid off on our journey, and as it helps us track our progress along the way. At the beginning of this video, I mentioned there's a tool that I use to measure my financial independence journey. It's a tool that I've built myself, and it helps me organize all my different financial accounts, whether it's my 401k, whether it's my Roth, whether it's my home balance, HSA accounts, savings, all these different accounts. It aggregates them and helps me get a forward-looking view of where I'll be this year, next year, and 15 years out. So it can help you better prioritize where your journey is. So if you're interested in getting a copy of that, be sure to click on this video right here. It's in the show notes below, and there's a link to that free tool that you can download in the show notes of that video. That video will walk you through kind of how to set up that tool and how to track your financial independence, but it's a great tool that I would highly encourage you to check out. So I hope you enjoyed the video today. If you haven't subscribed, be sure to hit that subscribe button. Like I said earlier, I share new videos every Thursday to help you on your financial journey. If you have insights of other topics that you'd like me to go over in the future, please write them in the comments below. I will respond. If you have any other feedback for me, I love to hear it. I'm here to help you grow as you work towards financial independence. If you're interested, you're welcome to check out some of my other videos where you can gain more insights and be better prepared to reach your financial goals. But thank you so much for watching, and have a great day.